Okay, so I think we'll get started with today's event. So hello, everybody. Thank you so much for joining today. Welcome to the third part of our 7-part construction webinar series that covers some of the top challenges that construction and building material companies face and solutions that NetSuite, as well as Appficiency's construction solution, provide to solve those key issues. So today we will cover the topic of retainage. We will focus on how NetSuite, combined with Appficiency's retainage solution, solves key challenges faced by construction companies regarding retainage. So to start, my name is Clara Savo, and I'll be kicking off the event for today. I am a marketing specialist at Appficiency in charge of running webinars and various strategic marketing initiatives. I have with me today Johnny Than, our principal and CEO at Appficiency, Morteza Hosseini, who is our Director of Delivery and a seasoned construction expert, Hamid Ishfaq, who is a SBC with experience in the construction ERP space, and Joyce Liu, who is a Senior Product Engineer. So for those of you that are not familiar, NetSuite is the first cloud ERP founded over 20 years ago. NetSuite has more than 29,000 customers in more than 200 countries across the globe. Also introducing Appficiency, who provides NetSuite consulting, implementation, and integration services. Appficiency has several construction solutions and has worked with clients in the land developer, general contractor, subcontractor, and engineering design service space. Appficiency also recently received the NetSuite Construction Alliance Partner Spotlight Award for its outstanding work in the construction industry. So just a few housekeeping items before we get started. Today's event is being recorded, all lines will be muted, and we will leave time for questions at the end, so please submit your questions in the chat throughout the webinar. So to get started, I'll first be going over the agenda for today's event. So we'll start with some introductions, then an overview of retainage, then we'll have a 25-minute product demo, and then end off with some time for Q&A and next steps. So with that, I'll now hand it over to Johnny, Principal and CEO at Appficiency, for introductions and our presentation.
Thank you so much, Clara. Very nice to have all of you back for another one of our construction webinars here at Appficiency. My name is Johnny Than. I will be part of your host along with Morteza Hosseini, and we look forward to presenting to you a spotlight on the retainage pieces of the construction solution. My background is over 6.5 years at NetSuite, over 15 years on the NetSuite platform, and over 300 successful NetSuite projects and solutions developed. I'm joined by Morteza, who I will let him introduce himself as well, and then we'll take off from there.
Thank you, Johnny. Excited to be here and having the third webinar with you guys. Morteza Hosseini, I'm the Director of Delivery at Appficiency. In terms of background, I'm a civil engineer, worked for 14 years in construction. And in the last 8 years specifically, I was working with different types of construction companies and helped over 350 construction companies to implement ERP solutions. And excited to share some of the best practices that I learned and taught to these construction companies for retainage specifically.
So thanks a lot, Morteza, for the introduction of yourself. We're going to use you as an expert on our panel here today. And really, I think for a lot of folks, even those that might come from the industry, especially because some of those folks from the industry are looking at IT for the first time as well, or looking at significant software upgrades for their ERP space. Tell me why and how retainage is used and how it works in construction projects. There's also multiple terms I've heard. I've heard retention, I've heard holdback. What's with all the different terms? How does this matter?
Yeah, of course. So let's start with the definition. All these things are nearly close, and they are technically the same word. Retainage is vastly used in US, holdback is a Canadian term, and retention is a term that actually people in Australia use for the same sake. So now, if I want to just pick one, I would go with retainage. And why retainage matter? So this is a concept developed in UK almost 180 years ago. And the main reason for that is to protect the customer from not having incomplete or deficient work in their projects. So usually what happens is they withhold 10% of whatever is the invoice amount. Of course, it could be different. The bigger is the project, that percentage might change, but the max usually is 10%. And this is helping the customer to be protected in a case that, the project is done, the contractor didn't do a good job, the work is not completed. Now you pay them all the invoices, and good luck, holding them responsible with finishing the work, and so they can use the project. So that's kind of why we are using the retainage. And how does it work? Is as simple as every single invoice, 10% you withhold. Then usually at the end of the project, when you have the substantial completion, you release 5%, and then when you complete the project, or sometimes you finish the warranty period, you release another 5% for your contractors.
Got it. So it sounds really like that's, construction companies are kind of doing best practice on really project delivery and quality. But what's the difference between AP and AR side retainage? For payables versus receivables, is there any difference?
If you think about a typical structure of delivering a construction project, you usually have the customer at top, then you have a general contractor, and then the general contractor would have a subcontractor, right, or a couple of subcontractors. So really what you are dealing with, if you consider ourselves as a GC company, right? So that general contractor, when deals with the customer on the AR side, needs to be heated by 10% on the AR, and then they need to pass the same thing to their subcontractor. So customer would withhold 10% on their AR, they would withhold 10% from their subcontractors on the AP side. So that's technically how it works. There are some different, different setup, as construction is a very funny industry. That's what I call it, because everyone is thinking they are doing the best practices, and then you find out people are doing it actually differently. I saw some people, the customer withhold 10% from them, they withhold 12% from their subcontractors. Sometimes I see 5%, and then I have different conversation with our customers that, hey guys, these are the risks that you are taking. So I want to make sure that you are aware of that, because we are not just here to implement the software. We are here to act as your consultant. Brilliant.
So really, between AP and AR, there's a bit of baton passing, if you will. And ultimately, especially if it's 5%, but I know 10% might seem like a lot, might not seem like a lot, but how much does it really impact project financials? Ultimately, if you're passing that baton anyways, isn't it all just a wash? Does it matter why don't you just track the project overall without it?
Let me put it in that way. This could be a cause of a project success or failure. As simple as that. Why? If you think about the margin in construction industry, the margin is not really high. Most of the projects, you are looking at something between 10, max 20% margin. Like 20 is like, you should have really a small project to make that much money. So if this is all you are making, imagine on every single invoice, customer withholding 10%. So that means if you don't manage your project properly, you would end up having negative cash flow, which I always call it, hey, you are investing on the project on behalf of the customer. Why? Think about it. Customer is really withholding 10% of your payment, which is that margin that you have. So your cost and revenue always should match, and if not, you are in trouble. That's why it's very important to manage the AR and AP side wisely. The other gap that I'm seeing is on the customer side, customer usually withhold 10%. On your side, you can only withhold 10% from your subcontractors. Now, if you're talking about a structure that GC hire some subcontractors and then purchasing material, because retainage wouldn't be applicable to the suppliers, you are going to see a big gap in terms of the AR and AP. And these are all important matters that our customer needs to be aware of when they actually sign the contract with the customer.
So that's very interesting, very illuminating. Thank you. I can see how your project financials are heavily impacted. But one more question before we get to your broad-based business details here. What about the other? There's multiple types of projects, correct, in construction. So do they all get impacted by retainage this way?
Yes and no. Like, for example, if you are talking about a land developer and their relationship with the bank, and they send the draw to the bank to just get the fund, there's no retainage on their bank draw. But any type of contract that you have a customer involved, they want to have that retainage. However, now the types of the contract matters. If it's a fixed price contract, it's 10% of every single payment. But if it's time and material or cost plus, then the trick here, the best practice here is most of the general contractors, they specify in their contract with the customer that you can only withhold retainage on my subcontractor's cost, because I don't have the luxury of having 10% retainage from my supplier. So you can't just withhold 10% on every single payment, because that could cause me a huge cash flow issue and risk. So that's what I can add here.
Brilliant. Thank you. Do you want to just quickly talk to us then about, what are the challenges that the efficiency construction solution is solving then with retainage?
Absolutely. So if you think about a general contractor who is subbing out 90% of the work, in a typical construction project, you are dealing with something between 20 to 30 subcontractors. And now, withholding retainage is something, releasing the retainage is another thing. So managing that cash flow, managing that process in a way that you don't get into trouble. And what do I mean by that? Retainage and releasing the retainage for subcontractor is a very sensitive topic. It can cause you lots of legal issues, up to putting a lien on property. So you have to be smart. You have to have the proper system that can show you, hey, this is the age calendar for your payment. You don't want, your subcontractors to go through that road. And funny enough, according to the researchers, this is a very common issue among the construction projects. Almost 20 to 30% of the projects are going through having the issue of not getting their retainage back, either on the GC side or subcontractor side. And this is all because either there is no proper process in place, or there is no tool to manage that. Sometimes they can easily forget that, hey, there is a need to send an invoice for retainage. And this is how we can help people to give them, the proper reports, the proper charts that they can be on top of their teams and manage the retainage well.
Got it. Thank you. I think that explains a lot why the engineers built it the way they did. So for the audience, let me explain a little bit about how Efficiency built its retainage solution to accommodate many of these things that Morteza is talking about, if not all of them. First and foremost is the retainage is effective right from the very first period and the very first transaction where it's relevant. So on each project, the efficiency solution will allow you to capture that retainage on a per project basis. Therefore, if you have different retainage rates or different retainage rates by subsidiary, the solution will support you. What we need to see in the software is really, I think, going to be around looking at it on a periodic basis. As you said, it's easy to forget, and anyone who's ever worked in a transactional-based ERP, which is, of course, the core of all ERPs, actually, it's easy to get lost in transactions. It's easy to get lost in the regular, periodic rhythm that happens for a project. And so the solution needs to be able to capture that first period retainage. In this case, the example here is $35,000, and that 10% retainage would then be $3,500, and move it out to a future date. So as the transactions happen, of course, the core normal ERP wants to immediately start aging that receivable on the customer side. On the AP side, obviously, the opposite, you're receiving the payable. Once the retainage, though, has been carved out, now you have to find out where it sits. And so we reconcile that against the general ledger so that the customer always has or the user, the project manager, has a direct balance by project for the total retainage or vendor side retainage that is in effect. And they can see that in a cash flow report. And then when they're ready to create that recovery invoice, as we call it, or that catch-up invoice either way for against the retainage balance, it will deplete that retainage balance ledger and provide a new aging as it's technically a brand new invoice at that time. So that's what the solution looks like. Any good ERP choice that someone's making should be using retainage in that sense across many transactions. It should be able to reconcile to each line of every transaction as well, so that every spend, depending on its categorical qualification, should also therefore be retained and applicable to retainage and recovery. Ultimately, I think the other key thing to note is that most ERPs bring to the table a broad set of capabilities, NetSuite being one of the best of breed, providing multi-currency, multiple regions and localizations for taxation. All of that needs to continue to be made whole on both the retainage invoice, the retainage and the regular billing invoice, as well as the recovery invoices, again, all tied out to the penny, to the ledger, so that you have a complete reconciliation for the accounting team. This is the guts of what Efficiency Solution went out to do when we decided to tackle retainage. And then, of course, there are some customer-facing forms required. Morteza, why don't you tell us about those?
Yeah, of course. This is one of the format that vastly used in construction industry. So technically, every month when you send your progress bill to the client, whatever is the total completed and stored today, this is under column G. I'm not having any intention to explain what is this form about. This is, of course, the progress bill. But what is important to understand here is column G is the driver, right? So you need to, at any point of time, you need to understand what is the amount of retainage that we need to withhold until the end of the project. And at the same time, it's important to understand what is the remaining balance, because that would be technically be the input for your payments and the future billing. So in this example, as you can see under column J, we have 10% of what is the total completed, right? So every month you go through this progress bill, you can see the difference between the total and what you had from the previous period. So every line would have a separate calculation. The reason for that is sometimes, not very often, you might find out that for different work codes, different schedule values, you might have different retainage percentages. And that is why we have to go with the calculation on every single line in our form.
I love it. So really, we're talking about a relatively, what seems innocent and simple calculation early on, getting very complex over time across multiple projects, various types of work codes, and progress-based billing. Retainage really does become an integral part of the entire transactional process for a construction project. I think it's a great time now to move to our demonstration. We will be having Joyce Liu, our senior product engineer, present for you folks. She and the entire software team at Appficiency has done a lot of work to make sure that Retainage is truly blended in through the entire architecture of the construction solution. It's seamless with everything you do, whether you're using work codes or not, whether you're using progress-based billing or not. Retainage is still available and is nicely reconciled out through. So we'll see how Joyce takes us through what that looks like in the NetSuite system now, and look forward to hearing all your questions and comments at the end of the webinar.
Thank you, Murtaza and Johnny. Hey everyone, nice to have you all in this webinar. So in the last two webinars of this series, we looked at how to create a project and use Appficiency's estimate to project sync functionality to create project tasks directly from the estimate, and how Appficiency's construction solution facilitates the use of schedule of values within NetSuite. Today, we'll move forward towards looking at how Appficiency's solution allows you to withhold customer and subcontractor retainage within NetSuite, and how it allows you to release this retainage and monitor your cash level as a result. Without further ado, let's dive into it. The first part I'll be showing is the withholding retainage, and the second part I'll be showing is the releasing retainage. Starting with the same sport stadium project we started in the last webinar. Now we have done some work for this customer, and we are going to invoice the customer for the work being done. As you can see in the progress/AAA billing, for certain of the work type, we have done a certain percentage of the work. And we are going to invoice the customer for the work completed. However, based on the contract we have with the customer, the customer is going to withhold 10% retainage from us. Therefore, in the invoice we actually send to the customer, we are going to reduce the invoice amount because of the agreement. And in the contract with the customer, we agreed that retainage will be 10%. Therefore, on the invoice created, I'm going to reduce the subtotal by 10%. And Appficiency solution allows me to automatically withhold retainage on the invoice. All I need to do is to click on the withhold retainage button, and it's going to deduct 10% retainage. As you can see, the 10% retainage is being deducted, and the amount due is adjusted. So in the invoice that I'm going to send to the customer can clearly see the work being performed and retainage deducted. Similarly, on this project, we subcontracted out some of the work to one of our subcontractor, and that subcontractor sent us an invoice. The invoice is for the work they performed, and they also deducted a 10% retainage before sending it to me. Because of our contract with this subcontractor, we are also withholding 10%. This is the bill that's being created from the purchase order. And I'm also going to double check on the invoice the subcontractor sends me. I'm going to double check that the number is correctly by having this built in NetSuite and by also withholding vendor retainage, by also withholding subcontractor retainage. So after checking withholding retainage, a 10% retainage is also being withheld. And we can see that the net amount is about 17,000, which matches the invoice the subcontractor sends me. And this is really key because with efficiency solution and within NetSuite, the vendor bill is being generated from the purchase order and retainage is being withheld. This allows me to calculate retainage automatically, and it prevents me from overpaying or underpaying because it double checks the number on the subcontractor invoice. So now if I refresh the project, I'll be able to see the retainage on the AR and AP side. As you can see on the project itself, there's a list for AR retainage, which shows the amount that's been withheld on the customer invoice. It also shows the AP retainage, which is amount that's withheld from the vendor. And it also gives me a list of the vendor where I withheld retainage from. So this is how efficiency solution handles the withholding of retainage. The second part of the retainage solution is releasing retainage. So we have several ongoing projects, and we're going to release some of the subcontract retainage, but also collect the retainage from the customer. With that, I'm going to switch roles. I just switched to the controller role, and it leads me to the controller dashboard. As you can see, the controller dashboard is pretty different from the other role that I've been using. On the controller dashboard, it shows the different roles and responsibility of the controller. For example, revenue, vendor management, payroll, HR, financial, and reports. What's cool about NetSuite's dashboard is that it gives you a window of different sides of the business, and a controller's view and administrator view is very different.
One thing that I would like to add here is why we need to have different views. So if you think about it, a project manager or project team, their focus is on one specific project that they are involved with, right? But the controller or the admin would require to see the overall picture of, let's say, we have 30 projects, we have one vendor involved in 10 different projects. What should be the process for withholding those retainages, releasing those retainages, and it's at the company level rather than the project level. That's why you will require a different dashboard and view. Thanks, Joyce.
And on the controller's view, Efficiency's retainage solution gives a controller the ability to easily manage retainage and cash flow. For example, on the controller dashboard, there's reminders of the customer to request release retainage and subcontractors to release retainage. It also has clear key performance indicators, which tells me here are the subcontractor retainage that's available for release in this financial quarter, the customer retainage available for release in this quarter as well. And this gives key financial data on the cash flow, because the subcontract retainage is the money we have to pay out, and the customer retainage is the money coming in. In addition, there's this graph which shows me the average days it takes to collect the customer retainage that's being withheld. As you can see, I can tell that for the Elmwood North customer, it takes about, on average, 306 days to collect retainage, whereas for the other customers, it's much shorter time to collect retainage. In addition, there's this retainage release progress graph, and this graph is really handy because it gives me visibility on what retainage is available for release on the customer side and what retainage is available for release on the vendor side. This visibility really reminds me, hey, these are the customer retainage available for release, so I can generate customer invoice to collect them, and here are the vendor retainage available for release, and that ensures we don't miss retainage. In addition, there's this monthly retainage trends, which shows me on month by month level what are the retainage that's being withheld from subcontractor, what are the retainage that's being withheld from a customer invoice. And as a controller, I really need to be able to see the customer and subcontractor retainage on a company-wide level. Therefore, I also have this list which shows me here are my customers, here are the total retainage amount withheld, here are the total retainage amount released. And if I want to drill down, I can click on the customer name, and it leads me to the list of customer invoices that gives the total amount withheld. In addition, for the subcontractor retainage list, it gives me the list of subcontractors, the amount that's withheld, and amount released. And by clicking on, just like on the customer side, I can see a drill down. On the vendor side, I can also click on the vendor's name and see the different bills where I withheld retainage and the bills where I release retainage. This is really handy because it is on the dashboard itself, and it really makes it easy for the controller to manage retainage. And this also shows the flexibility and power of NetSuite. It allows me to see these key information when I just first log in, because the dashboard is what you're going to see when you first log in. In addition to seeing retainage on a global company level, Efficiency's construction solution also provides a project manager to manage retainage on the project level. So if I switch to the project manager role, it also leads me to the project manager dashboard. Again, the project manager has another window into the business side, and the project managers tab is also different. It shows time and expense, resource management, reporting, and project accounting. On the project manager's dashboard, it also lists reminder to the project manager of project where we can request the customer to release retainage, and it also shows the vendors to release retainage. In addition, it also shows retainage on a project level. For example, it shows it shows the different project and what are the net retainage. What are the net retainage on a different project? And on this graph, it shows the retainage that's being withheld on different project on the customer side. Similarly, there's also a graph that shows the different retainage being withheld on different vendor. And these graphical views allows me as a project manager to easily see retainage. And if I want to look more at the detail, I can go to this list and it shows me like here are the different projects and here are the total amount withheld on a project level, the total amount released on the project level as well. And similar to the subcontractor retainage project view, I also have the customer retainage withheld and released on a project level as well. So now I'm going to go back to the controller view. And it shows me, and this graph is a really handy reminder that shows me like what are the retainage that's available for release. And it tells me that in April, about 31,000 retainage is available for release. And if I click on the reminder button, it shows me that for this project, 31,000 is available for release. So I can easily go to the global bar and open up the project. So on this project, we have completed a substantial amount of work. Therefore, 50% of retainage has already been released. And now, because the project has already nearing the project has already finished, I can collect the other 50% of retainage. So now I'm just going to generate the customer invoice to collect the other 50% of retainage. And all I need to do is to click on this button and it automatically generates the invoice for releasing retainage. Just going to approve the invoice, the recovery invoice that's generated. If you look at the GL impact for the recovery invoice to release the retainage, we can tell that the retainage is being moved out of customer retainage receivable and moved into account receivable. So now if I go back to the controller view and refresh, we can see that the customer retainage available for release has been reduced because I just generated a recovery invoice to release that 31,000 of retainage. And we can also tell that the customer retainage has also been reduced on this graph. And so what's remaining is for me to clear out and manage retainage in May.
And this is what I was talking about when we discussed the retainage and the importance of the cash flow with Johnny. So at any point of time, you want to make sure that the retainage that you are releasing for your subcontractor is definitely less than what you collected from the customer. Otherwise, you would face the risk of having negative cash flow on your project.
We have also received like a subcontractor request from one of our subcontractor, fire and safety, and they have completed their work on one of the project, and they're asking us to release their retainage because they need to collect the cash back. So if I go to the vendor record to look at the specific vendor, I can see the AP retainage reconciliation for this vendor. And this vendor has been pretty good. So we're going to release the vendor retainage on this project. Both the controller and project manager can generate retainage invoice to release customer retainage and retainage bills to release subcontractor retainage. So I'm actually going to switch to the project manager view and allow the project manager to generate the vendor retainage, the subcontract retainage. So on this project, I actually withheld retainage from several vendors, but in this case, this vendor has been good lately, so I'm going to release the retainage withheld on this vendor. And although I have like many vendors in the system, this suitelet and this page only shows the vendor where I withheld retainage. So because this vendor has completed all the work for the project, I'm going to release all the retainage withheld on this vendor. And this is the AP retainage recovery field that's generated to recover the retainage withheld on the vendor. So this is how Efficiency's retainage solution works. It withholds retainage based on the percentage specified on the contract and project, and it releases retainage. The release of retainage can be done on a percentage level. For example, on one of my customer, I first released 50%, and in this demo, I released the other 50%. And I also showed how Efficiency's retainage solution generates different dashboards and views that allows the project manager to easily manage and track retainage. As you can see, the subcontractor retainage available for release has also been adjusted because I just generated a retainage recovery view for retainage recovery bill for one of my vendor. And this retainage release graph also got adjusted because of the bill that's generated. Thank you so much for watching this webinar. Now I'm going to go back to Johnny and Mateza for any questions.
Amazing. Thank you so much for that demo, Joyce. So we will now move on to the Q&A portion of this webinar. So I see that some of you have already submitted questions in the chat. Thank you so much for that. If you have any more, feel free to send them through. So we'll start with the first question that we have received. So someone is wondering, can retainage withhold for protecting the customer against the Lien Act? So I'll let either Hamid, Morteza, or Johnny answer that question.
I can take care of that. Yes and no. The intention of retainage is really for making sure that the contractor is doing the work for either incompleted or deficient work. However, if you don't pay them, they can put a lien on your property. But I know many of the people, they get confused, and I understand why there is a question about that. But really, the intention is not for protecting the customer against the lien. However, between us, I know some customers, they do that. So if a GC doesn't pay the subcontractors now want to go through, putting the lien on property, they have enough cash in their hand, and they might use that in certain conditions. If there is a clause in the contract, and they use that money to pay the subcontractors of the GCs to protect themselves. But the intention should not be really for that. But, yeah, good question.
Amazing. Thanks, Morteza. So our next question is, what is the best practice for managing retainage for the general contractors that hire subcontractors to do work? So again, I'll let either of you three take that.
I can provide some examples, and then Johnny and Hamid, please feel free to add some context here. One of the examples that if I see in one of our customers' processes, I will definitely flag it, is sometimes you see they have the retainage with their customers for, let's say, 10%, and then they tell me, oh, we have a really good relationship with our subcontractor and we trust them. We know that they are not going to put us in a situation of uncompleted work or deficient work. Because of that, we just want to have 5% retainage for them. Well, that's good in terms of the relationship, but the reality is you are going to have some cash flow issues. And that is something that you need to be aware of. And that's why even I see some customers, they put actually more percentage towards the retainage for the subcontractors, which I usually don't recommend because that could cause really big issues. But that is the biggest thing that I always see, and that's like the huge red flag to me. Some other examples, always make sure that whatever you want to do and whatever is your strategy is in your contract. Make sure that the AR and AP side are talking to each other. Don't lose money on one side and then try to catch up on the other side. Usually this would start with the conversation with the customer. Understand what are the best practices for different types of contract. Cost plus is a completely different contract type and requires different structure for the retainage than fixed price. So make sure that you are aware of that when you are negotiating the contract terms with the customer.
Morteza, if you don't mind, I'd like to add one thing to that question. I think it's important to understand from a software perspective, along the same lines of cash flow. If you aren't in a single system, and I'm aware I'm very biased here in this webinar, but if you're not in a single system that actually reconciles the subcontractor retainage with the customer level retainage that you're billing, you're going to have a gap, and that gap will show up in a cash flow report. But unfortunately, for those that use integrated systems, it'll show up too late. You would have closed books on your prior period in your primary ERP. Then run your cash flow report for the cash flow report in the separated system as well that does the retainage check and all of a sudden you're going to find out you're out of balance or you're underwater for that period, for that project, but it's too late. You've already paid bills, people have already executed promises, and so you'll find yourself constantly in a state of being underwater on cash. And that's the big benefit of having it all integrated and truly part of every bit from the estimate all the way through to project closure. It's really key. We see that all the time. A lot of customers come to us with separated systems, and they wonder why their retainage and their cash flow process was so hard. It's just simply because the systems aren't designed to talk to each other, or the timing of when they talk to each other is too late.
Absolutely, and that's a great point. Even in my experience, I see some of the integrated software, because of the complexity of retainage and then the retainage after tax, before tax, they completely separate the retainage from their job cost report, and they say, "Oh, you don't need that. This is just a matter of the payment." And I'm like, No. You're absolutely wrong, because that could tell me what's going on my project. I'm missing that piece of data. So it has to be a part of your integrated solution. Thanks for pointing that out.
Awesome. Thank you, Morteza and Johnny. So we did receive another question in the chat. Someone mentioned that with some subcontractors, we have a good working relationship, and we sometimes release retainage earlier than expected if they request it, or we might withhold a different percentage on a given invoice than what was in the initial contract. So does your system allow us to execute those scenarios?
I think this is what I was kind of touching prior to having this question. One thing is what system can do. At the end of the day, system can do anything you want, because system would do what we ask for. Is it going to be the best practice? No, because you are going to put your project and your business at risk. It's not a matter of relationship. It's a matter of managing your cash flow. That's what I can add here. But Johnny, please feel free to add anything.
Yeah, actually, I would like to add something here. And Morteza is absolutely correct in this instance that it's a matter of managing your cash flow. And the reality of things is that, yes, in a business scenario, you do have those relationships and you need to manage them. So sometimes you do make certain exceptions for certain companies or individuals. And that's definitely something that happens on day-to-day basis, I guess. I've seen it happen with different customers, with different vendors that they work with. So the flexibility that our system offers in this instance, NetSuite, and then on top of that, the efficiency custom solution that we have, that's the beauty of it. So within this demo as well, you saw certain fields where you saw a percentage being entered. The beautiful part of the system is that you can actually override that on a given invoice. You can change certain values and you can accommodate those niche cases or those external requests essentially from your vendors.
Amazing. Thank you so much, everybody. So on that note, I think that we will end it here. So I'd like to wrap up by going over what is next in our construction webinar series. So for construction companies to be able to track the estimates and change orders from cost fluctuations on projects, they need even more. So please join us for our 4 upcoming webinars, which will cover progress billing, change orders, job costing, and a customer success story. So our next webinar is taking place on June 14th from 1 to 2 p.m. and that will cover the topic of progress billing. So definitely be on the lookout for the invite to that. With that, thank you all so much for joining. We'll be sure to send you over the on-demand version of this webinar as well after the fact in case you missed anything or would like to reference it in the future. Thank you again. Have an amazing rest of your day, and we hope to see you all at webinar number 4.